God forbid, Lewis, right now, you and I are hanging out, having a bite to eat, and God forbid our house is burned to the ground. I mean, think about that for a second. You don't even have another pair of shoes to wear, or a pillow to put your head on, or even a fork or plate to eat with. It's just you lose your memorabilia. You lose all of your life prior to that. And so, I mean, people don't think that's much until they go through this. One of the worst things a consumer can ever have is it's about as close to losing a really close family member as there is.
Quick favor before we jump in. It always surprised me that a large percentage of people who listen to the show regularly haven't yet subscribed. If you're a commercial real estate operator, investor, or builder who values conversations like this around deals, capital, and technology, please take 2 seconds and hit subscribe. It's a simple, free way to support the show. My commitment to you is that my team and I will continue bringing you higher level operators, stronger conversations, and real execution level insights every single week. Thank you. I truly appreciate it. Welcome back to the AI Edge podcast. I'm Louis Fernandez. This show is for operators, founders, and decision makers, the people building real businesses, navigating real constraints, and trying to grow with discipline in changing markets. Today, I'm joined by Robert Feldman, CEO and co-founder of WOW's Insurance Services. Robert has spent more than 2 decades in insurance, specializing in hard-to-place risk in high fire severity zones. And today he's helping tackle one of the biggest pressure points in California, property market and home insurance crisis. WOW has built a very specific solution for luxury and high risk homes in fire prone areas. And what makes this especially interesting is that it isn't just an insurance conversation. It's a real estate conversation, a capital markets conversation, and an operator's conversation all at once. Because when insurance breaks, transactions break, financing gets harder, and property values get pressured. We're going to talk about the current state of the home insurance industry, where the market's breaking, what brokers and property owners are dealing with, and where systems automation and better workflows can make a difference. Robert, welcome to the show.
Thank you, Lewis. I appreciate that. That was a great intro, by the way. I've been doing this for almost 28 years. And yeah, obviously we are a wholesaler, which is unique. There's two parts of us. We have a wholesale division where we represent multiple insurance carriers, but we even have on the other side of the fence, we have our own programs and insurance programs that are from London based and allow us to write up to 50 million in total risk for individual houses, which is pretty large. And what's kind of exciting is it expanded into 13 total Western states. So it's not just California, which is a great thing.
Incredible. Robert, when someone asks you, what do you do today? What's the simplest way you explain that?
Really, what we are, we have over roughly about 3 to 4 thousand insurance brokers that are approaching us for our programs. We do work directly with insurance brokers to be able to bring programs, constantly working in different states. I've had the honor over the last really couple of weeks to meet with several state commissioners. Last week, actually, I was in Sacramento. We have the distinction of also, there's a thing in California called the California Fair Plan. It's a policy of last resort. We are on part of the clearinghouse to help depopulate the Cal Fair Plan. And we have been working exponentially to be able to clear those things out. We're just starting the process of it, and we're making some really great headway. So we're really trying to lead the charge, really to help change insurance for consumers through brokers through the Western United States. And it worked out. It's working pretty well.
Amazing. You've been in insurance for a long time before launching WOWs. How did your path evolve into specializing into hard to place property risk and fire zone coverage?
Well, I hate to say it, 20, almost coming up on towards this year, will be 28 years, most of which has always been in fire zones. I'm sorry to say, in California, when I was a retail broker, I was in every major fire. We had homes that were lost, and so we've had the front view, the front line view of why what we have built has exponentially changed the market. And a great example, we had a 4% loss ratio in the Palisades fire, which has made the news. Most companies have lost billions of dollars. We had a 4% loss ratio. So it's about fire hardening. There's a lot of things that really are requirements, but there's definite ways to make things not burn, to be able to turn the tides. And we're just helping to lead the charge in an ever growing industry of problems. We're trying to be the solution.
Amazing. At what point did you realize that California market had shifted enough that it wasn't just a carrier problem anymore, but it was a market-wide crisis?
Really, about 10 years ago. 10 years ago was the start of the march, at least in California, where carriers were starting to get hurt and recognized. We're coming up on, I think it's about 7 or 8 years ago when we had the Malibu fire, it was called the Woolsey fire. That actually, believe it or not, was a fire that blew right through me. Okay. So I live in a city called Oak Park, which is like Westlake Village area towards in the Ventura area. So the fire originated and went right through us into Malibu that burned everything. And so just being able to see really front hand, just not what's, I mean, just the fire hardening and all the things that we do that have really aggressively made the change. And that's what we are constantly working on is what can we do? Because it's really an industry like any other business. Lewis, if an industry starts to lose money, they do one of two things. They either raise their rates or costs, of what they're charging, or they stop that industry. Insurance is no different. And it was having a lot of challenges. And I was able to see really front hand what the challenges were and really help lead the charge to really turn the tides. Here we are barely over a year later. And now we're writing policies that were unheard of even before the Palisades fire. So we just are doing a lot of great things to help lead that charge.
What was the insight behind WOWs? What gap did you see that needed a new solution?
Well, really what we've seen is, there's a lot of really creative and unique things we brought. One of the advantages of being a retail broker, I call a street broker for 25 years, is you kind of saw what was working in the market, what wasn't working in the market. And when we built it, we built out an idea or concept, which, by the way, Lewis, the whole world thought I was crazy. I was 25 years into very successful agencies that are still there to this day. To make this transition into being a wholesaler and launching programs and launching insurance, everyone goes, Robert, what are you doing? Spend another 5 or 10 years and be done with it, retire and go and enjoy life. I'm just not that way. I would almost make an argument, a crusader at heart. If I see something that's wrong or broken and I know I can fix it, I'm going to work to try to change the tides. And that's what we've been doing over the last several years. And we are now very aggressively being able to do that. I mean, the last 3 years has been such a journey. And it's incredible to see. I mean, we start off with really little or nothing to now representing multiple carriers as a wholesaler, having London programs, having billions of dollars of capacity to write insurance in 13 Western states and to meet with state commissioners and being able to do all the things with the California Fair Plan to help consumers. It's just been one heck of a ride.
You described your career journey in one word, revolutionary. Why that word?
You know what it really what it is I think a lot of times in a lot of industries, you need something to shake it up. I use a terrible analogy and I'll apologize to everybody out there already. I use the analogy of that we're kind of almost like a pirate ship. And when I have people that want to team up with us, I have a lot of people that come to us now where our crew is expanding more and more just because of how creative we are with what we're doing with our programs, how we work with insurance brokers, how we're getting out to community reach really is revolutionary. I mean, it's just not what happens. Even down to the concepts of what we're doing, we built our program based on fully transferable policies. So if you're a person that's in on one of our programs and you're selling your house, the buyer can obtain or be able to transfer that policy to them. That's unheard of. It's revolutionary. It's a change. And so we're constantly looking at what can we do to simplify the market and what can we do to really aggressively suppress the rates that have been rising for such a really about 5 to 10 years now.
Amazing. Let's talk about the current state of the home insurance market. From your perspective, what has changed most drastically over the last few years?
Really, what's changed is really the thing is what's called fire hardening. For those that don't understand it, this is why we had a very successful loss ratio in the Palisades fire. The days of having the canopy of trees over your house and vegetation that's literally growing onto your roof and the 0 to 5 feet and all the things that are not really well for houses. People don't realize IBHS is the largest in the insurance industry, talks about survivability of a house and just three basic things. If your 0 to 5 feet is cleared from non-combustible, so that's 0 to 5 feet of ring around the house. If you have your vents, Your attic vents or things like that with 16th inch mesh, so ambers can't get into it. And if you're what's called open exposed eaves, that's the edge of the house that hangs over. If it's boxed in cement and has cement, you are 73% more likely to survive a fire.
It's
Just
amazing.
simple. These are three simple things that would have saved a lot of homes in the Palisades fire and situations. There's also a lot of great things out there. We work with companies that are fire hardening companies that are really aggressive. I was just at the PLRB conference in Washington, D.C. I was speaking, and that's on catastrophe claims based. And we were talking at that conference about fire hardening with a great company called Timber Warriors that's really doing the vegetation part of mitigation for homes and communities. And we just are constantly on the move to try to help change. I'm sorry to say there's some stuff that needs to be fixed, and we're just leading the points of. We're not going to be a solution for everybody. We're going to be a solution for most if they're willing to do the things that need to be done from a fire hardening standpoint to really button their houses up to make sure they don't burn. It doesn't matter how great the insurance, I say to everybody out there, how great your insurance is. If God forbid, Lewis, right now, you and I are hanging out, having a bite to eat, and God forbid our house is burned to the ground. I mean, think about that for a second. You don't even have another pair of shoes to wear, or a pillow to put your head on, or even a fork or plate to eat with. I mean, it's just, you lose your memorabilia. You lose all of your life prior to that. And so, I mean, people don't think that's much until they go through this. One of the worst things a consumer can ever have is it's about as close to losing a really close family member as there is. You lose these things. This is the stuff you might have something you treasure that means nothing to somebody. Your high school blah 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 might be
Right.
your most prized joy thing that reminds you of your life. Well, if that's gone in the fire, the insurance is never going to bring it back. And so preventative is what we're looking at. It's trying to be proactive instead of reactive.
I couldn't imagine. I think that's one of my biggest fears is the house burning down, right? I think that's everyone's one of their biggest fears. I
Yeah.
remember as a kid, the fire that happened down the street and it was just devastating. I mean, the home was displaced, the family was
Yep.
displaced, they had
Yep.
nothing, and it was from a kerosene fire. It was
Wow.
the gentleman had an old kerosene heater downstairs in the cellar, and it just happened to be close to a piece of clothing, I think. Sometimes they would use it almost as a clothesline. I remember my grandfather doing that, as a clothesline where the heat would just rise and just be able to dry the clothes, right? Before
Yeah.
it happened, and it just burned the house. But I'll never forget that. That
No,
would be
it's
a
scary.
huge that would be scary. That would be very, very scary. I couldn't imagine
Very
losing
scary.
my house.
Crazy.
Robert, why has insurance become such a major bottleneck for homeowners, brokers, and real estate operators in California right now?
Well, it's not just California, it's really the Western United States now. We
Mm,
deal with a lot with Washington and Oregon, Nevada, Arizona. Utah's having a little bit of issues. Colorado's having a lot of issues, and a lot of the Western United States. Really, why insurance is becoming a bottleneck is, again, goes back to what we talked about earlier, Lewis. Insurance carriers aren't losing money. If they lose money, they raise rates or they stop writing the insurance. So what's happened now is there's a lot of what's called the admitted carriers. This is the big names, the State Farms and the Allstates and the Farmers that are just either not writing insurance or very, very limited in writing insurance. So when you think about it for a second, when you're buying a house, Lewis, there's really, people don't realize this, depending on what state you're in, there's really three legs to buying a house. Okay. The obvious leg is very straightforward and simple. It's the mortgage, right? What's your principal and interest? What's your payment? That's easy. That's you can fix that if you want to, whatever in that nature. The next leg really is the property tax. Some states have higher property tax, some are lower. But again, it's generally pretty close to being fixed. You've got two things that are fixed. The really wild card is the insurance. And why it's important to know that is when someone buys a house, Lewis, when you're buying a house, you're going to have a finite dollar amount. We all have budgets. We all have, I don't care if you're a multi-billionaire, just the joke, to the person who's, paycheck to paycheck. We're all going to have some kind of budget of what we can spend per month on a house, realistically. Well, if all of a sudden your insurance cost goes up 10x, so you go from 2,000 to 20,000 because of being pulled out of a market, that could be the difference of people not being able to make their payments. And if you can't make your insurance payment, then all of a sudden what happens? The mortgage wants to foreclose on you. And what does that do? It ripples through the market. It also affects sale price, Lewis, because let's say, for example, you have a beautiful house and it's in California or wherever it could be. And it could, I mean, California, I don't think is really much below $1 million any longer is the joke. But let's just say it's a $2 million property you're buying and you have a policy that's going to cost you three or $4,000, but that same house in a fire zone costs you 30,000. How are they? Both of those are not going to be $2 million sale prices. You're going to see that one that's got the higher price insurance because of different risks. There's going to be less demand. There's going to be, obviously people that have to have more money to qualify for it. There's a lot of different things. So insurance has really become a major part of it. And that's one of the things I've been a speaker for the California Association of Realtors. And I've talked about this at their conference up in Carmel this year is really understanding the process because really all of this needs to come together. Fire hardening, you need the real estate space, you need the insurance space. And we're constantly working on trying to get everybody in the same room.
Amazing. When insurance becomes unavailable or unaffordable, which is what we were just talking about, what happens downstream to the real estate transaction?
It basically becomes where some homes, what we're seeing right now, and this is why we really talk about fire hardening. There's a lot of consumers that want to go sell their house and they just look up and go, I'm not doing anything. That is the buyer's problem. Well, what they don't realize, and I've spoken at many conferences, it's the seller's problem. Here's why. Let's use the example of a $2 million house. It could be $20 million, but I'm just going to say $2 million, right? And for whatever reason, you have this property and it cannot get insurance. So if it can't get insurance and you're going from a situation where you have a $2 million listing and people are talking about, but they can't get insurance. Well, the only way you can get that house sold in some cases it might be now you're reducing it by to 1,900,000 or 1,800,000, 1,700,000. We're seeing 20, 10, 20% reductions on properties in areas that are considered still going strong because of just the insurance. So there's a lot of times I look at a consumer and will say through a broker and say, hey, look, we've got a great carrier. This policy is transferable. We can do a lot of great things through your broker and we're talking about the selling side of this and going, but look, you need to really look at this 20 or 30,000 of mitigation to get this thing done. I'm not doing it. That's the same house I'm watching get reduced from $2 million to 1,700,000, 1,600,000, 1,800,000 in reductions. And I go, so basically by not spending $30,000, they cost themselves $200,000 in reductions. And so that's where you start to see the difference in that. And it's kind of a forcing thing. There are laws that are changing. I was up in Sacramento last week, just over a week ago today. I was working, there's a subcommittee on Cal Fair Plan depopulation that I was a part of. And what happens is it just gives us the ability to continue. They're going to continue to pass laws for fire hardening because, again, this problem isn't going away. We're not getting better at this. It's going to continue to be tough for markets. And the only way to survive it is we're going to need to get better about doing things where things, just homes don't burn. And that's where it comes to the difference.
How often are brokers and property owners coming to you after they've already hit a wall with traditional market?
It's multiple times a day. California, there's some states now, Lewis, I'm sorry to say, California's gotten to be very close to what's called a non-admitted state. The really big admitted carriers are pretty much especially when you get to a certain size house, when you get to about a 3 or 4,000 square foot house or larger, they just are now pretty much out of the market. They're just not a market. So you're seeing more and more of it being what's called non-admitted, which are the Lloyd's programs or different ones. We represent a great company called Stand. Stand is an incredible company. They write from $4 to $10 million structure, total insurance values, and really doing it aggressively based on science-based analysis. Everyone out there should look that one out. They're a great company.
Amazing. What's the biggest misconception right now for property owners about the insurability in high risk areas?
The biggest misconception is that what they believe everyone first of all doesn't believe there's two things. There's two big misconceptions. I'll make it two. One, there's a lot of people that do not understand that right now the rebuild costs in California and Western United States has exploded over the last really 5 years. Homes that used to be $300-400 a square foot are now $600-700 a square foot. And there's some areas that are pushing towards $2,000 a square foot. So think about that for a second. You have a 5,000 square foot house. And in the past, that was a couple $1,000,000 to rebuild. And now they're talking about 10 million to rebuild. I mean, you're just talking about, so the idea of what rebuild costs are That is a humongous misconception right now in the market. The second thing that's really getting people really is also is just the fire hardening. They don't believe their houses are going to burn. I will never forget. I used the example of the Palisades and the Malibu fire was prior to Santa Barbara, Napa, all different fires. We write in those communities. We were writing homes in those communities to brokers. We'd be on there and people will be arguing that, the famous line was the Palisades has never burned. I had people saying that within weeks of the fire breaking out. I know I'm not worried about it because the Palisades has never burned. They'll never let the Palisades burn. And so, you know, being realistic about what your rebuild price is and being realistic that is in California and in a lot of the Western states, you're probably in a fire zone. And being realistic about what you're doing to defend your house is the key thing.
What's the biggest misconception for real estate agents and investors?
Really, what the biggest misconception is insurability. Again, there's a lot of real estate professionals and I know it's very tough on the listing side, especially for realtors that are taking listings, because what happens is they don't want to upset their client. Lewis, if you're a realtor and you're trying to get a listing and you're battling two other realtors, saying, by the way, you have to do it. We think you're going to have to do a lot of fire hardening on this house. And we think you're going to have to spend, 10, 20, 50, $100,000 to do this, to get this so we can sell it, isn't exactly what a lot of consumers want to hear. But the problem and I use this all the time, Lewis, when I speak at different conferences for realtors, I always ask the question, how many of you get paid for opening escrow? And I go like this with raising my hand. Okay. And usually once in a while I'll catch someone raising their hand. Realtors get paid for closing escrows. So it doesn't matter. You're much better off. And the really good realtors out there that do listings are very secure with what they're doing. And they're understanding it more and more or about the fire hardening and the requirements and the things that are going to be necessary to do so.
Amazing. Wows has built a very specific model around helping solve these problems. What makes your approach operationally different?
Really, again, is the fire hardening part of it. I know I keep
Yep.
saying it over and over
Yep.
again, but
Yep.
really making sure there are some risks. We get phone calls. There's a lot of the Hollywood business managers will call us. And like there's one house specifically where if you look at it from Google Earth, where you can go from sky to look down the roof of the house, you can't see that. You can't see the roof. You can't see the
Really?
house. There's
Wow.
so many trees and so many plants canopying the house, and there's ivy on the front of the house and all these things. And they call us going, we need to get insurance. And we keep saying over and over again, you're going to have to do major mitigation to get this house compliant. If you want to, it's in there. You're going to save, this is a large house. They will save hundreds of thousands of dollars a year by doing so. But again, you can only do so much. So, so what we have done is our major difference is fire hardening, helping houses look beautiful, but also be able to survive a fire. And that's a key thing.
Amazing. You talked about transferable policies, specialized in placement solutions, and broker first support. How did that model come together?
Well, it's actually, again, I hate to say, sound terrible, but doing this for a long time, Lewis. So, what I've seen more and more over time is, especially in a market that's not stable, this move was to really help bring stability to the market. A company stand that we wholesale through started to do it. We have others that are still looking at the possibility because there's no real actuarial science that shows there's no the disadvantage. Now, the only thing that's truly transferable is the fire portion of it, which is the most important. But if, for example, for some reason you have someone that has multiple liability claims, things of nature, you can remove that part of it off the policy and make that consumer go somewhere else for it. But again, at least the structure is covered. And that's the key thing here at this point.
Amazing. As an operator, what has been the hardest about scaling inside of a crisis driven market like this?
Well, scaling actually it's been a lot easier. I mean, we have a lot of brokers that want to. We do a lot of different events and trade shows and things of that nature. It's not very hard to get, the brokers to come to approach us because they're in a desperate mode. I would say 10 years ago, it would have been extremely difficult to get a company out like ours off the ground because when all the companies were wide open and everyone's fighting over a 50-cent rate difference. I mean, rates that were so tight, you're within dollars of each other, kind of a thing. It was more relationship driven, right? Right now, for a lot of brokers out there, they just don't have opportunity. And I see this because, again, the California Fair Plan, we're on the depop population situation, and we're watching how the California Fair Plan is growing exponentially per month. just from brokers that don't have access to markets. There are areas of California that should not be on Cal Fair Plan that the brokers have put on because they just don't have a company that will write it. Makes a major difference.
You work closely with brokers and real estate professionals. How important is education in your model?
Lewis, that's all I do. I got two great business partners that are really aggressive in there. And with, holding, the day to day, I've got a great crew that is writing policies with brokers that brokers bring to them. Really what my job really is to get the word out. I'm pretty loud. I got a deep voice and I can echo from the hilltops. And I'm not afraid of getting in and mixing it up with everybody because I'm mixing it up with, again, I made that pirate ship comment. We are really on a ship by ourselves, and we're attacking differently, and we have to because if not, the industry continues to rise on rates. It's not sustainable, and we have to turn the tides.
What questions are brokers asking you over and over again?
The one they ask over and over again is it's almost kind of freaks them out a little bit is that what we're able to do. So there's sometimes we come back with rates and they're just really almost shocked. It's a shocking moment that we were able to do something, based on fire hardening to exponentially drop the rate. It kind of almost scares them a little bit. We've had some situations where we've had consumers believe some things are too good to be true. We had a great example, and it's not a cheap one. Uh, we had two homes for a really large client in San Diego County. And I think the premium came out to about 120, 130,000. These were big homes. We didn't know it. We were running this through our company stand that the current incumbent company was over 250,000. So we were $100,000 less. Absolutely freaked the client out. We have not closed it to this day. And people will go, why would they not close? That's $100,000 savings. Sometimes it can almost be too good to be true for some people. And that's where we're always constantly dealing with.
You've done panels, podcasts, lunch
Absolutely.
and learns, and media. Do you see trust and education as a part of the product?
Absolutely. Have to continue to get the word out. There's a really bad disconnect right now. And I've talked about this many times in the industry. When I worked with London, which the Lloyd syndicates, there's really different layers. You have the street, this is the street insurance broker. You could have then the next layer could be us, an MGA wholesaler. Some people are direct to the carrier, but it's usually street, wholesale slash broker, insurance company, reinsurance company. The reinsurance companies are the backstops of every insurance company that there is. A lot of them are the Lloyd syndicates, but it could be different parts of the world. Well, what's really a really interesting thing that's going on right now, Lewis, is there's a lot of what's called capacity or premium to be able to be written to the reinsurance, but the bottleneck actually is at my level. So right now, there are some of my competitors that are not allowing the premiums and things to flow because it's to their disadvantage to do so. And there's a lot of really bad things in the industry. Again, being the pirate ship, we get to be able to attack and change that and really shake things up. And we're constantly looking to do that because it's good for the ecosystem of insurance, is what we're doing now at this time.
If a broker's not set up operationally to handle complex placements well, what usually goes wrong?
A whole host of things. So really what happens if they're not set up, we're constantly education goes back to education pieces. We'll have a broker and let's say, for example, they're writing through a lot of our great companies. We have a company called Princeton that writes up to 4 million. And we have a company called Delos that does a great job. And we have different companies that we're constantly working with. Heritage is another great one. And all of a sudden they get the 1 out of 100 home, right? So they're writing these 3,000, 4,000 square feet. And then all of a sudden someone asks them to try to write a 15,000 square foot house. Okay. So now that's a different ballgame. Now, what the brokers do like about us, though, Lewis, is that we are really there to help protect them. And there's sometimes we will walk a deal. We'll have a broker come to us and say, this beautiful house in Montecito, California should be 400 a square foot to rebuild. And we're like, I'm sorry, it's at least 1,500 and we're going to price it this way. But I'm not going to get the deal. Well, that's sometimes the best deals are the ones you don't get because when that person has a problem and they're suing you because they're underinsured, that's a really serious problem at that point. So, we're constantly educating, brokers constantly. Some of them are they're very savvy to the industry, have done it for a long time. The thing that's scary about the insurance world is, you can get a license, you can get It doesn't mean that because you got a license and you have, some basic areas of mission, you could be a new broker and just dumb luck fall into something through a referral or something like that. Doesn't mean that they're doing it properly. It's making sure that you really have experienced people on the backstop, and that's kind of what we bring.
Amazing. Let's shift the gears a little bit to the operator side. When a business like yours is growing, where does operational complexity show up the most?
Really, one of the things that's great for us is the fact that we've always worked to keep it simply or simplify. We're constantly simplifying things. The California Fair Plan depopulation right now, the clearinghouse. We had probably spent the last really couple weeks, and I was just at lunch with my two business partners, and we were just going over a great length and going, we've tried it this way. It doesn't work this way. We're constantly testing because really like in all sports, one of the best analogies about sports is speed kills. The faster you are, the better you are, the more likely you are to be able to close transactions. And we all have a finite amount of time. For those out there who know this, I'm pretty ADHD, which means I don't really ever shut down, but I'm pretty OCD, meaning I'm neurotic about it being perfect, Lewis. So we're constantly looking for ways to streamline.
Where do submissions, policy questions, broker onboarding, and internal follow ups start creating drag?
Usually we have a pretty good, my two business partners are excellent at doing so. My business partner, Joel Silver, we've centralized and does the onboarding for all the brokers. We also, Joel actually, what's great about Joel Silver is that he has actually specialized on a really difficult policy. It's called an HO6. It's condo insurance for walls in coverage. So what we do is we generally will send in the walls in coverage to Joel Silver to make sure that he is able to handle those situations and it works out pretty well.
Amazing. Amazing. If volume doubled tomorrow, what breaks first operationally inside?
Actually, that's one of the great things about our infrastructure. We've got it pretty solid at this time. Most of the work is done by the brokers, by the court forms and things of that nature. But long story short, we're able to really take care of and handle a lot of great things.
Fantastic. Let's talk a little bit about technology. This is the AI Edge podcast. Where do you think AI or automation could actually help in a business like yours?
Really, we're really more about the modeling. We're constantly doing AI approach now. We are constantly modeling because there's costs when you're looking at fire scores and things of nature. We're constantly modeling and building our models to see what's the predictability of instead of simply submitting um, to one of our carriers 100 different homes, that we might have come in a day. We're getting better about being able to predict which of the carriers would be ones that would want it based on a whole host of criteria. So we've actually been very aggressive in building our own AI approach to try to make sure we can streamline what is available. So in essence, instead of spending unlimited amount of time trying to do if a submission takes 5 minutes for you to submit, you're going to do 12 per hour. Well, if you're trying to do 100 submissions, you're 8 hours of just doing submissions. Well, if you can use an AI tool to say, hey, these are the 15 that are pretty much guarantees this carrier is going to quote this when I write it. And here's 20 that's questionable. So you're at 35, but here are 65 that we think are very unlikely and are not worthy of it, but they're better to be in this insurance company for a whole host of reasons. That's what we're constantly working on our own internal AI.
Amazing. How about broker communication?
Broker communication is pretty straightforward. That's the easy part for us, Lewis. And the reason for it is we're not consumer direct. Okay. So we do work through our brokers. So brokers, we are very hands on relationship driven. We like to work with our brokers. We are again about speed. So, a lot of brokers sometimes they can wait for weeks for things where we're turning things around in days, and if not a same day. So we're pretty aggressive in what we're doing. We believe that is what we need for the market and to help further stabilize it.
Are you seeing AI helpful in underwriting support?
AI underwriting support right now, no, because I still think it's still missing. The underwriting side of it, I'm just sorry to say, a lot of it's still manual. Even though there's fire scores and things of nature, there's still going to be an underwriter that looks at a property and still wants to see, especially when you're talking about premiums, you're talking millions of dollars of coverages. I mean, Lewis, let's think about something for a second. If you are the head of an insurance division or an insurance company, I don't think you're gonna want to know if you're gonna put out $10 million of what's called capacity or put your name on for $10 million, you might want to look at it more than once. you're going to want to make sure it's in with what you're writing. You're getting a rate which you're going to want. So it's still, there is some, I do believe that AI modeling, one of the great things, the company we deal with, Stan, does a great job. They're doing full AI modeling now for houses and showing actually how a house, if a fire is approaching, what trees, what plants, what's the probability if you remove these things. So that is already part of the industry and getting strong.
How about policy servicing?
Policy servicing is, again, interesting because that's typically handled by the retail broker. So when we get it, it's very precise. So we're not dealing with the consumer wanting to ask 20 questions and things of that nature. The brokers are usually handling that. So we can streamline, in essence, to the carriers or our own programs, our reinsurance, to get the endorsements we need. That's a pretty easy, straightforward approach.
Robert, where do you see tech being useful, but still needing a strong human layer?
I really the fire modeling is, I think, more and more, and just as we get better and better about fire hardening, because there's evaluations on things. So you could have a high fire score, but if the house is perfectly mitigated and it has a fire defense system and it's got all these things and it's got an on-call fire department that's going to come defend it, well, heck, I'd take that over a low fire risk. I'm just saying, it's just, there's a lot of this. So being able to differentiate is the big difference.
What part of the business should never be automated?
The pure underwriting, really, because right now, especially when you get into houses really above 3,000 or 3,500 square feet, it needs to stay manual. It really has to. I mean, there are parts that are automated, the fire scoring systems and things of nature. But again, there's things called aggregation issues. So if you've got a house that comes in, you might be rejecting it, even though it's a perfect house, based on just overpopulation of an area or aggregation. So that's the AI part of it. But the actual, do we want this? Do we not want this risk is still going to be, I think, the manual approach, especially in fire zones.
Where's AI overhyped in the insurance world right now?
I think it's overhyped really when it comes to helping consumers pick out their coverages. I'm still a believer of, I'm going to say this is overhyped. You'll see commercials like name your price and this and that. You really better understand. I just am saying it because it's not fair to look at the industry and say, I didn't know. Okay. I didn't understand it. Well, okay, this is a serious situation. So if you're able to understand it, the faster you can understand it, the better we are and the better you're going to be as a consumer. I think that's a challenge, which will never end.
Robert, let's talk a little bit about the future of the industry, which you have a wealth of knowledge being so much in this industry for so many years. How do you see, doesn't necessarily have to be California, but like, Western insurance markets evolving over the next few years?
I think it's going to continue to evolve more and more with regard to fire hardening. I think the aggregation is what we really tackle the most to be able to spread risks and really change how insurance works. I think that personal opinion, we'll see. I make a joke with the realtors all the time that I think 5 years from now, we'll look back, I'll be speaking and talking about fully transferable policies, and everyone's going to go, yeah, what are you talking about?
Yeah.
That's a given. That's the way it's always been. It's like, no, 5 years ago, it wasn't, kind of a situation. Oh.
Do you think this becomes a model that extends beyond California and
Yes.
other Western markets?
Yeah, we're already there. We're already there. And that's going to be the greatest way of been actually to be able to suppress or press down insurance rates is to expand beyond California, where you're bringing a bigger pool, spread of risks, things of that nature. That's the thing that's the industry's missing right now. And we're aggressively trying to work that through.
What do you think separates firms that survive this insurance cycle from firms that really get overwhelmed by it?
I think what happens is right now is there's a lot of turmoil in the industry. There's a lot of people, transactions happening, occurring. They're buying each other up. There's a lot of companies that are now trying to go direct. There's a lot of things where there's just a lot of problems. And with that being said, it's just as you see these things and they're constantly occurring, the ones that survive are the ones that are the most adaptable. They're one of the greatest things I would say, about what we've always been and what I've always been is I'm a very good read of market and I'm very quick to be able to adapt. And you have to be able to adapt, good and bad. There are some times, Lewis, you definitely don't there. You look and go, this is the industry's making the wrong move. It's going in the wrong direction. But adapting to make sure it happens and then be able to position yourself properly, knowing it's going to be a reaction in the wrong direction, we're moving in that direction, but at the same time, being able to forecast when that happens and goes wrong, this is where it's going to go next. The adaptation of individuals or companies is going to be a really key thing. That's the way it's always been, as I would say.
Do you think the long-term winners in this market will be people with the best carrier access, the best education, or the best systems?
Oh,
All of it.
because if you've got the most knowledge but you have no carriers, you're not writing business. If you have all the carriers but you don't have the knowledge, you're going to be sued 6 different ways because you're going to miswrite policies, right? And if you don't have the systems in place to be able to handle it, how could you handle any volume? You fail miserably with knowledge, and carriers are not going to support you. So all three of those are vital.
Amazing, Robert. Let's have a little fun, a little lightning round. You ready for some
Go.
quick hits?
Yes, sir.
All right. One word that describes the current insurance market.
Broken.
Most misunderstood issue in home insurance today.
The valuation of the rebuild.
Biggest mistake brokers make in hard to place risk.
Not understanding fire hardening.
Biggest mistake homeowners make.
Again, not understanding fire hardening.
It's a huge one. Speed or precision?
Both. I would be much more in my world. It's better to be precise than fast. But when you have both, you're really truly moving in the right direction.
You're dangerous.
Yep.
Last one. What does success mean to you today, Robert?
Success means to me today, we keep fixing the impossible or overturning the impossible. I've kind of made a running joke about the fact that everything we've done over the last really, I've done for 28 years, but really over the last 3 to 4 as a wholesaler and our own programs, was everyone told me it was impossible. This is impossible. So we overturn and fix, and then it's the higher part of the next part of the hill to climb. This next thing's impossible. The world has told us it's impossible to fix the California Fair Plan. First of all, it's impossible to really work with the clearinghouse and be able to help brokers. Brokers won't be in tune. Well, we've got that. We're now turning the tides. So now it'll be impossible to slow down the growth of the California Fair Plan. We're going to do that. It will be impossible to shrink the California Fair Plan. We're going to do that. It's impossible to bring carriers back into California and the different Western states. We've already done that. So we keep getting told it's impossible. I would make a joke, Lewis. I feel much more comfortable when people tell me it's impossible.
That's a
If they tell
challenge.
me it's impossible, I'm a lot more comfortable. If they tell me something's easy, I'd probably fumble it in football terms. I wouldn't be sure what to do.
Where do you see your company in 10 years?
I see my company in 10 years really leading the charge again. What was an industry that was broken that led the charge to fix it.
Robert, for anyone listening who wants to connect with you, learn more about WOWs, or follow your work, where's the best place to find you online?
You can find me a bunch of different places. LinkedIn is obviously the easiest, Robert Feldman. You can look up WOWs. You can find me. My email is really straightforward. Also, it's Robert at WOWS, WOWS, insurance.com. People forget to get the S usually. So Robert at WOWS, WOWS, insurance.com.
Fantastic. Does WOW stand for a particular acronym?
You know what's funny? The whole world thinks it was. It was really, again, a really, you can see kind of one of our like behind me we did just like one of this is one of our booths that was one of the original ones we had. It was pretty funny because we made it loud. WOWs was to make sure people came across us when we were very beginning, was a way to make brokers wonder what the heck we were. It doesn't stand for anything but other than just, we wanted people to really think about it from a marketing standpoint. How can we make people think about us? And so they would walk across trade shows just to see what we were. And we'd have this loud, burning, obnoxious booth. And it would give us the 30 seconds to talk to insurance brokers as to why we're doing things.
You walk by and you say, wow.
And we always say, we correct them and say wows. We say wows is the bad
Wow.
joke.
Wow.
Yep. Yep. It's a running joke amongst us.
Why the S?
We just, it stands out. So we want to make sure people stand. If you say wow, it's not a really wows. It's kind of almost like a slur, a slang of words coming out. So we want it to be something that makes people wonder what it is. I want people to think it's an acronym. I want people to think, because if you're thinking, then you're remembering us.
I love it. Robert, this was a great conversation. I really appreciate you being here. The way you
Thank
broke
you.
down not just the insurance issue itself, but how deeply it affects the real estate market, brokers, homeowners, and the broader transaction environment. For everyone listening, if you got value from this episode, share it with another operator, investor, broker, or property owner trying to better understand what's really happening in the insurance market and where it might be headed. Robert, thank you again for joining us on the AI Edge podcast. I appreciate you.
Awesome, Lewis. Thank you very much. Look forward to coming back again. Let me know.